Good day, friends. So, let's summarize the results of the trading week. It was an interesting week. It was active and positive. A couple days ago, the weekly Bitcoin and Ether options on the AE exchange expired. We received a huge amount of open interest. Because of the serious growth, put options went out of the money. Buyers and sellers of put options went through expiration out of the money. But options that went in the money resulted in delivery. Most of the call options expired in the money. Let's look in detail at what happened this past week. On October 16th, there was a breakout of the 200-day moving average, and it stopped being resistance and became support. And I've talked about this in previous videos. The Bitcoin price went up. I said that serious resistance would be at level 31 and 31,500. On October 24th, these levels were easily passed, and the price continued to rise. Above this high, only on March 28, when the price reached the level of 48,500. What will happen next? Either a new high will be formed and we wait for more positive news. News like the CES approving ETFs for large Wall Street companies. We expect a move to a high like the one on March 28. But most likely there will be some respite, and we will see a new high at 38 or 39 or 40. We'll see what happens. By the way, I came across some interesting information. This is the cost of Bitcoin mining by one major mining company, Bitforms. In the third quarter of 2023, the cost of mining one Bitcoin was $16,900. The full costs are $22,700. The company is trying to look ahead and assume what will happen after halving. They believe that the 16.9 number will turn into 32.9, doubling in value. And if they upgrade their equipment, make it more energy efficient, they could cut losses to $23,500. There was a time when the cost of Bitcoin mining was not worth it. At the end of last year, Bitcoin reached such a low level that mining was more expensive than Bitcoin itself. It was cheaper to buy Bitcoin at the market than mine it. So sometimes I advise paying attention to things like that. How about Ether? Just a couple days ago, Ether reached a new high, approximately 2,140. The high of this year, April 16th, was crossed. Before that, the resistance at 2,030 was crossed. And now we see that the price is between these two levels. The price did not go higher. It stopped and pushed off from the previous high, which is now a support. In case the price crosses 2,140, the Ether will go higher and will show good results. News that BlackRock has applied for an Ethereum spot ETF gives hope that we might soon see an intense growth. The next high for Ethereum is at 3,578. The absolute high of Ethereum price is at 4,850 level. And now I will demonstrate the situation with the US market and SPY. Starting from the end of October, this asset has been showing quite an active growth. What does it mean? At the background of declining inflation, players' expectations of rate cuts have appeared. The stock market is actively discounting future financial flows, and these price movements are foreshadowing the future. The price of SPY was 410, and now it's 440. But considering the inversion of returns, it looks strange, because the inversion of short versus long bonds means the possibility of going into recession. But enough about that. Let's talk about the present. The Bitcoin futures price is 37,700, up about 7% over the past week. Pay attention to volatility, it's also up. Ether has grown significantly. At the beginning of the week, we were trading at somewhere around 1,900, and now it is 2,090. And at one point, it was 2,148. Ether has shown an increase in volatility as well. Unfortunately, those who used to trade on stock markets do not understand the peculiarities of trading on the cryptocurrency market. The fact is that cryptocurrencies can grow very aggressively. It is a relatively new financial instrument, new technologies that replace classic ones. I'm sure digital money is a technology built on blockchain calculations. And as the price rises, we're seeing an increase in the interest of market participants and investors. Cryptocurrency volatility can be very serious, and this is reflected in options. So I really don't recommend using strategies like selling out-of-the-money call options because we get a double punch. When the asset price rises, we get a negative delta loss and a vega loss because volatility can rise a lot. The last month has proven that. Since options have a nonlinear dependence on volatility growth, you can incur significant losses due to vega. This is especially true for out-of-the-money options. Now pay attention to the Matic. Matic has also grown. Earlier it was 65, 67, 68, and now it is 83. The Dogecoin also made quite a performance. On Saturday it was quiet everywhere, but considering it all, Doge showed significant growth. On November 5th, the price of Dogecoin was below 7 cents. But with volatility rising above 100, Doge started to rise, especially on Friday and Saturday. And now we're going to talk about strategies that might have performed well over the past week. And one of my favorite strategies, which I've talked about many times, is the strategy of buying a vertical call spread and selling a put option. If a rise happens, selling the put option eliminates the possibility of a loss. Even if the price stops or drops slightly, it is necessary that this line is not below the level of 0. And this debit, the premium for selling put options, allows you to finance the purchase of a vertical spread. In this strategy, we sold put options of strike 34, bought call options of strike 36,500, and sold strike 37. We could have taken a wider range and bought call options at strike 36. Then the result would have been even better. We know that the profit for a vertical spread is directly related to the difference between the option strikes of that spread. Such a strategy would have brought us more than $1,000. The following strategy is based on the belief that the Bitcoin price will fixate at the level 35. Bitcoin has been bouncing from one round value to another round value lately, 25, 30, 35, but the price hasn't stopped. And if it had stopped, we would have gotten even more profit for this strategy. I'm talking about the ratio put spread selling strategy. Here we bought put options of strike 36, 1,000 contracts, and sold put options of strike 35, 2,000 contracts. If we had opened this strategy a week ago, we could have made $1,000 because of the growth, with a maximum risk of 1 Bitcoin. If the price had not continued to rise, but stopped here, there would have been a potential for even higher profits. And this strategy also has great risk management potential. The next strategy is on Dogecoin, reverse ratio call spread. We could have sold 100 call options of strike 72 a week ago and bought twice as many call options of strike 76. In addition to having a good delta in this strategy, it gains by increasing volatility. We would make a profit due to delta and vega. This strategy would make a profit of $500. But also the best part about this strategy is that if there's no strong rise, we have a break-even zone and will not suffer any loss. I choose a wide spread between the strikes, but you could have taken a narrower one. And that's all I have on last week's strategies. As always, ask questions in the comments. If this video was useful to you, put a like and subscribe to the channel. Also, subscribe to our Telegram channel. I wish you good luck and see you next time.